You know, I must admit, I'm not a big Etsy fan, but I'm also not a huge, like, handmade, crafted person. But why so high in pricing?
That is the big question, because even at the low end of the range they were marketing, they were coming out at a big premium to the other e-commerce companies that are currently trading. And so the question there is why? What is it about Etsy that makes it so special that it warrants a 9 times 2014 sales valuation in its IPO? One of the answers that I've been given is this idea of scarcity, that we haven't seen many tech IPOs this year. There have been 7 this year, which is about a third of what we saw the same time last year in terms of tech IPOs. So investors want growth. Etsy could be a good way to get that with 56% top line growth. Other people are looking at this and saying Etsy has a good chance of getting acquired in the future. So if we buy it at a premium now and say eBay takes it over in the future, then we could get a premium on top of the premium at some point. So that's pure speculation, though.
Okay, so it sounds like eBay is on the top of the list of those who could acquire Etsy?
Mainly because it plans to spin off PayPal, and after it does so, we'll need to find a new engine of growth. PayPal has been that source of growth for eBay. They could look at Etsy, which has a similar model, but it has clearly captured this niche marketplace for handmade and artisan type customers, and see that as one way forward.
Okay, let's talk about Virtu Financial, right, which is going to be trading on the NASDAQ. And they delayed their IPO, right? Wasn't there some sort of hubbub around Flash Boys, Michael Lewis, markets are rigged? That's why this happened?
Yes. For a high-speed trading company, their IPO sure did take a long time to get done, and Michael Lewis may be partly to blame for that. Of course, when they initially decided to debut, this was almost exactly a year ago, that was when his book came out that basically painted high-frequency traders as part of a system that's rigging the markets, and here you are, Virtu, trying to sell to these same fund managers who feel that the market is rigged. So bad timing on their part. A year later, obviously things are looking much brighter for Virtu. They benefit from some of this market volatility that we've seen in commodities, that we've seen in FX, and could benefit in the future if and when the Fed raises rates and creates more volatility in the equity markets, which a lot of analysts are projecting. And so their timing is spot on this time around. We're able to price at the high end of the range, and we'll see what happens with trading today.
Okay, well, I mean, it's kind of died down, right, since Flash Boys.
Exactly. Michael Lewis, too, right?